The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome back, folks. We have the Dow Industrials right now down 42. You get the NASDAQ up 2. S&Ps are off 2.5. We have gold up $4, trading at $12.91. Going after that May swing high. We have silver down a penny at $17.43. Notes and bonds. Here you go. Notes are up 4 ticks, 131.28. Bonds, 30-year up 21, 169.15.
Is that an all-time high?
All-time high. The 30 years at an all-time high. You know, I thought the 10-year had been all-time high, but I went back, and for 2 weeks it traded under this in 2012. I was in shock. It was like, wow, okay, I don't remember that.
Yeah.
But bottom line, it did. So I suspect that's exactly where we're going. Now, and, you know, the volatility index, folks, if you want to see something that went up in an incredible way, and in particular, that the market didn't get crushed in an incredible way, this volatility index.
Wow.
In 2 days, the volatility index went from 14 to 2093. And we got the right man to talk about volatility
Right? I was just
index.
thinking that. Who's going to talk to us about volatility and how maybe you can shape your trades and profit off it?
Totally. Get that hockey stick, get those posts going, man. We got our man, Mr. Kevin Hinks, and every trading day right here at TFNN, folks. TD Ameritrade, Thinkorswim, Kevin, Scott, Cindy, they do an amazing show, 12 to 1 Eastern Standard Time. Get it right on your cell phone, TFNN.com. Hit Tiger TV, and you're going to get great HD video and audio. Kevin Hinks, what's going on?
What in the name of Myron Scholes is going on with these markets?
Hey, man, you know what? I'm like, yesterday, so I'm doing the show yesterday afternoon, right? And someone was talking about the VIX, and I pulled it up, man. I'm saying to myself, you know, the VIX folks moved higher, like we were down like $500. it was
Right.
really unusual, right? I mean, that was a monster move.
Here's what it is, Tom. From my days as a specialist on the CBOE,
Yes.
the VIX is always a little lower on Friday than it should be, because what traders do is they move their dates forward,
Okay.
especially in the summer months, right?
Okay.
So midday Friday, they're going to move their date to Monday morning
Yeah.
and not trade anything that doesn't line up on Monday. So that makes Friday's VIX a little lower, and it makes Monday's VIX a little higher. That said, you had like the perfect storm here. You had that happen. You also had the Brexit vote kind of take a turn over the weekend,
Yes.
which caused, you know what it caused? It caused that word that every trader hates, which is uncertainty.
Yeah.
And people, for the first time now, they're not sure what this is going to be. You know, it's much more in doubt than it ever has been, and people went running for protection.
Yeah, man, they laid it on.
Man, that's intense. I know.
Because you know what I did, Kevin? I had to look back in January. I says, hold it, man, I want to see this correlation. So I took the Dow up, from January, so when the VIX, had gone that much, the Dow went down 700 points. Well, we only went down 200 in 2 days. It was like, wow. Okay.
Yeah. After going up so much, too, in reality. Right?
Yeah. But that protection, man, they're paying up for it now, aren't they?
Right. And yesterday, think about this stat, guys. Yesterday was the 45th day where we hadn't made a 1% down move in a row.
I see.
45 days without a 1% down move.
Yeah.
And so what would VIX be if we didn't have the rest of these events coming up this week in the market?
Right.
Where would VIX be then?
Wow.
In the middle of summer.
Yeah.
So you've got some crazy cross currents coming on here. You've got a market that's really, the market didn't move very much yesterday. There was some net stock for sale to go on the bell yesterday, so it moved a little bit at the end there. But all in all, kind of a benign day in the market.
That's what I thought was so shocking.
Yeah,
Exactly.
I agree. I hadn't seen the VIX until you just pulled it up because I didn't think anything that abnormal was going on.
That's what really wow, man.
Yeah.
And folks, okay, this is why you want to listen to the option hour by TD Ameritrade, because this is when the opportunities, when you get blown out VIX numbers or minute VIX numbers, that's when...
When I saw you pull that up, I was kind of thinking, like, shame on me for not knowing that. I mean, that's talk about a critical factor, exactly.
Right. So, I mean, you're going to get, the next couple of days is going to be a little crazy, right? And so you want to be careful and make your moves and keep your powder dry and see what this market does. But
yes,
it's going to be an interesting couple of days, that's for sure. And then, of course, this vote next week, the rhetoric this weekend, Tom, is going to be at a fever pitch. Right?
Yeah,
until it votes.
And just driving into work, I was surprised that their largest newspaper voted to exit. It's like, okay, man, I think thing's going to happen.
It's possible for sure, right? Yeah.
You get some kind of elite structure newspaper that's saying we're leaving. The people have already said they're leaving. Do you know what I mean? It's like, okay, man.
One of the big British newspapers came out and said they're leaning towards leaving.
Yeah, the Sun.
Yeah. So it's uncertain, and that's what this market, that'll drive protection. People like things defined and precise. Put a number on it.
Yeah.
So they don't know what that is yet.
No, they don't. Wow, amazing.
Yeah.
So what are we going to talk about today?
We're going to do a little more discussion on iron condors and Vega, and we're going to talk about Vega. I think Vega is going to kind of dwarf the discussion suddenly because of the timeliness of it. But we're going to talk about volatility.
Perfect.
Beautiful
thing. Timely.
Right here, folks, 12 o'clock, right on your cell phone, TFNN.com. Kevin, thanks so much. Look forward to the show.
Can't wait, guys.
You stay right there, folks. Tommy and I are coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now down 58. You got the Nasdaq off 7.5. S&Ps are down 5.5. We got gold up 250. And this market, folks, is one deviant market. You know, yesterday I tried to get it to higher price, couldn't handle it. This morning, it almost looked like it could get into higher price. You know, I was watching the European markets, and they had tried to get back to, like, just down slightly a few times. Like, I'm talking like 5:30, 6 o'clock this morning.
Okay.
And they couldn't handle it. I kept looking. I says, oh, maybe they're going to try, you know, to get this thing going. And see, and one of the clues, folks, watch this. I'm going to show you the DAX, because the DAX is coming into the swing point. So it broke when the DAX came down. It broke the swing, the first swing that had been established, two separate swings from May 6th and from the 24th, and they broke it with volume, big volume. We did 109 million, and we did 102 million versus 85 million and 89. But now what's happening is that it's coming into this other lower swing, and it's rejecting that. So what's cool here is this. The way that I'm looking at this market today, it's like, okay, this is quite a move down in 5 days for the DAX, right?
Definitely, yeah.
Our own move, more than likely, you know, I expect we're going to be down today, but I expect it's going to get a little less so. And what it's really saying is that this next swing point down, perfect. Let's put the SPY up now. The next swing point down, more than likely, we'll see a bounce out of it. But our swing point down is kind of far from here. It's 204 to 202 or 207.
Yeah.
You know?
Yep.
Because that DAX come down hard, man. I mean, you're talking about some hard numbers on the way down. I heard a great statistic this morning. We were talking about LinkedIn yesterday.
Yes.
So check this out, folks. LinkedIn, there was an analyst on this morning. They were asking, well, you know, how do they make their money? And remember, we were thinking about that yesterday. So LinkedIn has 45,000 accounts that pay them $3,000 a month across the world.
Okay, when you say accounts, is that a company or a person?
Companies.
Okay, 45,000 companies.
45,000 companies that pay them $3,000 a month, specifically for recruitment. Okay. So that's the biggest deal, right? Cool. Then they get advertising on top of that. But then they asked them the question, this was really funny, as they said, well, did Microsoft just buy a modern-day mailing list?
Okay.
Isn't that funny?
Sure, yeah.
You know? But bottom line is that, so that's
it's some fashion of that, right? It's not quite a mailing list, but it's more like a mailing list / ecosystem / database / cloud / you know, all of that, right?
And because of the spread, and the spread in recruitment business is great. Microsoft's going to make a fortune.
There's a lot of money in the headhunting business, all that, right?
Huge.
But I think even what they're looking at is, you know, I was reading an article yesterday where you can, you know, you have, and I said it specifically, right? Outlook, everything in your Outlook, your calendar. So your calendar's in there. Well, guess what? I have a calendar meeting with you, and it's going to tell me that this is who you work for. This is where your history is. This is what you're in charge of. This is, you know, and it breaks down all of that because it has your LinkedIn. It's going to give you like a meeting briefing of the people you're meeting with, you know, and their history, and think how that's just going to build and build and build and build.
Yeah, and I heard that number goes, so LinkedIn has 200 million users that use it either every month or every day. But Microsoft is 1 billion.
Oh yeah, for sure. Right. Yeah. Right.
Yeah. Crazy, man.
Right.
So let's take a look at.
Go ahead. Sorry.
Let's take a look at this market first. We'll get over to the NDX. So NQ, because it's going to be interesting. So the NDX got a good pop this morning. Right now we're at 4410, and what you had is that the retail numbers come out, and that's what that must have shot up. So it was down at the that's good. Okay, so it was down at 43.97, going to pop all the way up to 44.32, and now it's back testing. So the kicker on the NDX right now is going to be, you know, how it handles this 44.06 level. We're at 44.10 right now.
That's some fast market action, man.
It's some huge market action. Yeah. There's no doubt about
30
that.
30 points up, 30 points down, right?
Right.
Yeah.
Big time. We take a look inside the NDX 100 that we're looking as to what is the strength versus the weakness. The strength is Yahoo. That's up 2.2%. Baidu is up 2%. Oh, that's interesting, man, because watch, I got to look at Baidu. Baidu, I'm coming into work, they were telling me it was down. Well, look at that. So it
was until it opened, right?
That's a spread. Look at that. 159. It rejected 159. It's at 167.
Rejected it in about 10 minutes.
That's unbelievable, man.
And it was back above yesterday, yeah.
Seriously. Look at that. Crazy.
That is.
So what we have happening here, too, though, this is an indication, folks, when stocks trade like that, that's an indication that you're going lower. Because those vicious counter-trend moves like that are like, oh, no, we're going higher.
Yeah.
Oh, no, it doesn't hold. We're going lower.
Yeah.
You got, let's see, it's T-Mobile. T-Mobile is the third leader, up 1.3%. C-Trip is up 1.2%. Now, taken away from it, you have American Airlines down 1.6%. Illumina's down 1.6%. INCY is down 1.5%. And Liberty's off 1.4%. Inside the Dow Industrials, what do we have? Inside the Dow, we have the leader is GE. That's up 0.4. You can see look at how weak the Dow is, folks. You know, the biggest move is they're only up 0.4. Apple's up 0.4. Disney's 0.4. Verizon's 0.2. And taken away from it, you got American Express is down 2.3%. Home Depot's down 1.6%. Coke's down 1.3%. And Nike is down 0.9. Let's go look at American Express for a second. Yeah, she's, let's see, so 409,000. Yeah, she's coming down with some volume. She's going into 2 million, 2.2. So there's some heavy volatility out here. And folks, if you haven't test drove the Nadex platform, great time to do it. That's the bottom line.
I'm looking at it. I'm like, man, it is continuing down. You know, we have you know, the Nadex platform here, and this is, you know, it's these. Your Bloombergs are great, but man, these charts really jump out. I'm like watching these go down and down and down. It is.
And as you come over to our website at TFNN, you can hit the banner on the top and the side. They'll put $25,000 of paper money into your account. You can see how these contracts trade out. And, you know, bottom line is that the volatility is out here, and it's out here in spades.
So I was just going to bring up, you're talking about trying, right? Great time to try out a free trial to Steve Rhodes Mastering Probability as well. He's got his workshop tonight, 6:30. So, of course, Andy Hecht follows you up from 5 till 6 tonight. We'll take a half-hour break, and Steve Rhodes will start it up for an hour at 6:30 till 7:30 for his subscribers.
Nice.
And so we've opened up the free trial for his newsletter through today, through tonight. You can sign up for a free trial, gain access to his newsletter. Comes out every morning. Great newsletter, and you gain access to the event talking about the oscillator unchanged line. And the long, short line, every trader needs to know about.
Right, and you know, I had him on the program last night. He was going through it. It was pretty cool, man.
Yeah, he talked to him about it.
He was showing the charts of how the turns take place, and he's going to explain what those different lines mean as they converge. And there's nothing like convergence, man.
Yeah.
Convergence and divergence, you know?
I do.
Yeah, really.
I'm with you.
Well,
totally.
It's interesting. Divergence even tells me more sometimes. It's like, you know, it's like, okay. It's supposed to...
It reveals more.
Yeah.
Right, I agree. Yeah, right.
Our phone number is 877-927-6648. So you stay right there, folks. Tommy and I will be coming right back. Dow right now is down 80. You got the NASDAQ off 15. S&Ps are down 8.5. We're going to be right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. We have the Dow right now down 66, NASDAQ's off 12, S&P's are down 7.5. And bottom line is that the volatility is out here in spades. So here, I'll bring up because I was surprised about this morning. I'm going to bring up this so we can take a look at this. And, after I brought it up, I remembered the 30-year rate at one point had gone down to like 3.3.
Okay.
And it only stayed there, though, not long at all, but about 3 weeks. But I'm going to bring this back, and I'll show you the 10-year, folks.
Back like 20 years, or
yeah,
25,
that the 10-year did trade in 2012. There it is right there, 135.29. Imagine that. So, it looks like you got, this is a monthly, well, actually, the rates didn't, I guess maybe the rates must have stayed that low for, that's 3, 4, 5, 6, that's 7 months. There
was some rough times then, right? In terms of the market.
I guess so, yeah. I mean,
I'm not sure either.
No, in 2012, it seemed like we were out of it. But bottom line is that, yeah, they had those rates came down dramatically. Now, that was the 10-year. Now, the 30-year, we are at all-time highs. When Larry gets back here, Larry's going to be going for a boat ride. Larry and I had a bet, and Larry is going to go for him and his beautiful wife.
He's going a little sailing.
Yeah, totally. He can't wait. Pretty sick. So here it is. We're at 170.27, and before this, it was the all-time high was February 170.26. Isn't that crazy?
Big numbers.
Big numbers. And if we take a look at the actual numbers, right now the 10 years at 1.59, and the 30-year is at 2.40. Imagine that. Wow.
Yeah.
Unreal.
Yep.
No two ways about it. Some of the higher volume stocks out here. Let's see what we have. You got Bank of America is down 9. You got let's see, Twitter's up 61 cents. You got Citigroup down 43. Wells Fargo's down 39. If we go into the XLF, the banks, I'm sure it looks like they're still getting hit. Yeah, they're going slightly lower. XLF's down 15 cents. 12 million shares traded. You
Going slightly lower, just like rates, right?
Right, I know. You get expansion volume, though, in that XLF. The XLE, the energy, let's see where our energy's a sideways move. The XLE, if you are short those energy stocks, the XLE, folks, needs more volume as we move to a lower price. That's kind of how this baby is set up right now.
So we have the Fed meeting today and tomorrow, and then do they have an announcement tomorrow?
Let me see.
We'll have to figure it out.
Yeah, FED. I believe tomorrow, let's see, so.
Calendar, look.
Calendar, yep, let's see, statements.
2 p.m. Wednesday, maybe Jade might be saying in the den.
There's the statements, okay.
There you go, June 15th.
June 15th, Fed announcement date. Yeah, no statement. See I'll put this up.
Okay.
You can see the.
No, go ahead.
There's a.
No, I think that's because those are in the past.
Okay, cool.
Yeah,
okay.
So there is a statement.
Okay.
I believe. I think there might be a statement at 2 p.m. Wednesday.
Yeah, that would make sense.
Yeah.
You know.
Yeah.
And.
So that'll add some some fuel to the fire for sure.
It more than likely will. I mean,
especially with rates doing what they just keep
doing nothing.
Right.
Exactly.
Keep going lower. Right?
Yeah. Well, here, if we bring up the Fed fund rate, this is like wild, man. Look at this.
0%.
0%, and now we're not even over 50%. Going into 2017.
That's pretty cool. I haven't seen that recently.
Yeah. What does I guess we've had high volatility, but this changes so much so quick. It's almost like. It's nice bringing it up, but it's like you always kind of trade off it. Do you know what I mean? Because it's like,
I don't know. I apply a decent amount of credibility to those numbers actually when there's money at stake.
I heard. So listen to this. That it's great you're saying that because I heard a big money manager say that listen, the Fed is not going to be able to go up until the market says it can go up. Looking at these rates, that's
how things work.
Yeah,
right. I mean, that's where
he was on
money
Bloomberg.
talks.
He was on Bloomberg yesterday. He's saying, "Hey, guess what?
I mean, you want to know the statistical probability of who's going to be president right now? Yeah. Go to the money market of the statistics of who's buying odds of to win the presidency, and that's the actual probability that person has to become president because that's where money equals. That's where everything, and that's kind of a similar take here.
It is. No,
that's where money sets the market.
Yeah.
If that was really far off, right? Somebody would be correcting that market by profiting off the imbalance and bringing it back to equilibrium. So yeah, it can be off, but how far can it really be off from reality? So that's
And right now,
and guess what? It can be off, but sometimes, and that's where you can make a lot of money when you can understand how it's off.
That's right. Yeah. But realistically, on a steady basis, the bottom line, you have to pay attention to it.
You should lend some credibility to it for sure. Right.
And so if you're listening in your car right now, folks, what we're looking at is this: we're looking at the Fed funds future rate, and this is a tradable instrument that people big funds put a huge amount of money on this because they can hedge it back and forth. So it's the 13.7% chance that they would that short-term rates would go up in July.
Yeah, just you skipped past 0% in June, which is what she talks about on Wednesday, right? Then, go ahead, but
13% July, 28% in September, 30% in November, 46% in December, and then we go up to February 1st, and it's 48%.
48.9, we're almost there.
Oh my God.
Almost at 50%.
I'm telling you.
Yeah.
It's pretty wild, man.
But you know what? That can all change tomorrow afternoon.
That's right. No, it can.
Man. That's just that quick.
That would be
and it can, what she says, it can, obviously. The bigger effects on those numbers, I think, are like the jarring jobs report or something, where it's, that's just not talk. That's something that really is going to affect it no matter what. But she has the power to swing some markets for sure.
Oh man,
That's what she says.
There's no doubt about that. Our phone number is 877-927-6648. NQ. Let's go back to those NQs again, because the NQs, if they break out this bottom, which they want, there you go. I want to show you something too, folks. I just showed Tommy this when we were at the break, because when you match these things up, so the NQs are just breaking out the bottom of the expansion on the way up this morning, which is at the 4406. But if you go over to the E-minis, and I'll explain to you why we did this after the next break, because I'm trading those NQs. If you go over to the E-minis were given a decent signal that they couldn't hold a higher price on the expansion top side this morning. And then at the break, I said, oh man, it's going to be interesting to see whether this can break it. But what had happened is that the S&Ps broke it first, folks. Okay, so it's like that. It doesn't mean that the Qs have to, but it brings the probability higher that that is what you're going to get. And that has to do with the aspect that when you're a large money manager of people getting in and out, they have an assortment of stocks. They just don't have S&Ps. You know what I mean?
Yep.
You know. So, bottom line is that you know, this is a nasty market. You know. Our phone number is 877-927-6648. Dow right now is down 81. Nasdaq's off 18. S&Ps are down 9.5. We have gold up $1.80. We're going to be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We at the Dow Industrials right now down 61. Nasdaq's down 14. S&Ps are down 7.5.
They're jumping around quick, those numbers up there.
Some of the let's take a look at some of the Dow stocks out here. So we have let's see.
So quick, Bloomberg's struggling.
Yeah, we have American Express down $1.80. You get Exxon up 18. Oxy is flat. Big Mac is down 47. Amazon, look at Amazon. Amazon's up $3 right now. AMZN. It's hanging at those highs, no doubt. So if you're over at the Nadex platform, let's go through this trade here, because I got a kind of a weird trade on right now, folks. But I'll walk you through what I did out here. So this morning, when I was bringing this up, I wanted to go short the NASDAQ.
Yep.
The NQs.
The NASDAQ, yep, 100.
And NASDAQ 100. And when I was looking at Europe, I could see that it was fluctuating back and forth. I said, I'll give it a shot. And so I had sold 5 contracts.
Okay.
And I did that, I think I did it around 7 or 6, maybe 8.
Somewhere in here.
Yeah.
Somewhere in, I mean, it's not that it's the same, but yeah, there was somewhere in here before it popped, basically,
right.
You were
and,
short somewhere.
And what I had done is this, and I knew it was dangerous because I was doing the 40-point spread. I looked at the 80-point spread, but for what my risk versus my reward would have been, I would have risked a little bit more than my reward at that time of the day.
Sure.
On the 80-point spread.
Sure.
So I went to the 40-point spread. Now, what happens on the 40-point spread where I was at that point is that I was risking less money, but I was actually risking more than I could lose it all.
It's all premium.
Yeah.
Most of it, right?
Exactly.
Well, yeah, most of it.
Well, it was under the 44.10 when I did it, okay? Meaning,
so there's some intrinsic value, right? Because
the
ceiling is 44.10,
right.
The floor is 43.70.
Right.
So yeah, there is. I can see, somewhere in here you're getting between 8 to 10 to 6 points. But you can see right now it's trading at 44.08.
Right.
And yeah, the market, of course, there's going to be premium in there, right?
Right.
Because your ceiling is
44.10. Exactly. So bottom line is that it goes against me. And it's like, okay, man, like one flip out like in a big way. I said, okay. Now the intriguing part is that even when it went that far out of the money, I was only down half my investment, which was pretty cool.
I could see that because maybe it was trading, and this is guessing from being familiar, right? Maybe it was guessing at trading at 44.02 with 8 points of premium, and even going this high, it was still going to be priced at 44.06. There was going to be, because just like this, the market knows that there's value in that option.
Right.
So it's not going to be a $0 option. And they know that there's value, and they're not going to,
That's right. And when I put it on, I was risking $91
per contract
to make a 310.
So that's at about 44.01. Right. Because that would be $90 square. Right. 44.01.
Bottom line, it goes the wrong way. And so as it went the wrong way, I get over to the S&Ps, and I'm looking at the S&Ps on the spike, and that's why I brought up the action. I says, you know what, the S&Ps aren't holding up here. So I went back over to the NASDAQ, and I grabbed 3 more contracts. And those contracts smoothed it, well, it could have been the wrong way, but the bottom line is that smoothed it out dramatically. So now it's
I'm sure they averaged things well.
They did.
Right? Yeah.
They did.
Yeah.
They did.
And that's why you ended up with 8 contracts, and it looks like you're in at almost about 44.02 for the average.
Right. So now it's going to get intriguing because what happens, now you're in the money. Now what I'm going to actually do here, because I don't like having this much at risk, really.
And that's because the delta is picking up, right? It's going to move quicker. As in, when you have so much premium, you're going to get. But as you approach the center of that contract, you're going to get some big movement with 8 contracts.
Right. And so what I'll do is take half it off.
Cool.
Cool. But so I want to go back to the S&P just so I can show you this again, because when you do this, and I've always done this, man. It doesn't matter if you're trading the S&Ps, you should do it with the NASDAQ. Both of those futures, because they're related. They're related. Right. So if we just go back to this S&P again, I'll show you what I was looking at. It's like, okay, man, why can't you hold? When what happened is that when the spike came, the first spike came right at that 9:30 mark, right? And then the next one was like, man, you're not going to hold that quick. So we went to 2072, but all of a sudden, the end of that 10-minute buy, you're at 2069 again. It's like, okay, man,
Yeah.
And now, with that being said, watch when I show you the NQs. The NQs were holding up there, and they went higher. And it's like, oh, man. So they took longer to fall apart. The spike seemed higher, okay? And, they got up to 44.31. And, it was lighter volume, but that's when I decided that I'm going to take that shot because of the S&Ps. And then the second part of it, the confirmation, had to do with how the S&Ps, when the E-minis came down into that breakout area, because that was crucial. So let me just go back to that so you can just see that again. So what had happened, and this seemed to happen by a good 5 minutes maybe, that the bar at 1010, we went from 2068 to 2063. Now the low of the breakout bar was 2064. So the E-minis were leading down. Someone's always leading,
Yeah, right. No, and everything is related, not on every single day, but it's always good to keep. It's great. I completely agree. That's
what happens, folks. The reason I wanted to lay that out, it doesn't always happen all the time, but if you pay attention to it and look at it, do you know what I mean? It's like, okay, the market was talking at that point.
Sure.
Let's go to our man Carlos in California. Hey, Carlos, what's going on, brother?
Hi, good morning, Tom. Good morning, Tommy.
Morning, Carlos.
How you doing, man?
I'm doing all right, thank you.
Good.
Tom, I have a question related to the S&P. I have one contract short at 94.
Yep.
In 2094.
Okay.
And this is my question. Related to the Brexit, that is going to be a vote for it in the meeting with the Federal Reserve.
Yes.
How likely, or what do you see different? And I think that's the question. How do you see different than when the Brexit, the Greek vote was going to go through? Because I remember we had a situation like this where the market was dropping and dropping and dropping.
Sure.
Everybody was expecting a big move to the downside, and actually that happened the opposite.
Yeah, no,
what do you see different now?
I'm going to trade, and I got a great question in the gold report yesterday. A subscriber asking that, geez, do you do anything with fundamentals? We just talked about swing points. And, I answered that, says, listen, I know the fundamentals, but I trade off the swing points. And I do. And that's the exact same answer I'll give you. Do you know what I'm saying? That you want to stay. The larger scope I'm always cognizant of, okay? The decision on making the money, taking it on or off the table, to me, is always the swing points and always the volume. That's it, because that's the buying and selling. And what happens with those decisions is that I don't have, it's a yes or no to me all the time, because I do the exact same thing. Yeah. So it's made it easier over the years that, no, that's what I do. I don't depend on, what the news is going to be. I'm cognizant of it, and I'll use it as a divergent thing a lot. Do you know what I mean? Yeah. It's like, oh my God.
And you factor it into, you're aware. You like to be aware of it, and that's,
Stay right there, Carlos. We'll come right back, all right?
Thank you. I'll be here.
Dow right now is down 86. You get the NASDAQ off 19. S&Ps are down 10.5. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We get the Dow right now down 98. Nasdaq's off 24. S&Ps are down 11.5. We're talking with Carlos. We're talking about trading the E-minis. So, Carlos, the way that, there's no doubt news events, happen, but the way that I would look at this is that what is the swing point it's going into? Does it have lighter volume, heavier volume, and do we get a rejection of lower price? You know what I'm saying?
Right.
So, here, let's bring it up. So, if we bring this up right now, it looks to me, because this swing is, pretty far down here. We're at 2058. Well, the top of the swing is 2035. The bottom is 2014. That'd be a nice place to get down.
Over.
Yeah.
Yeah. It'll be very nice. Well, thank you very much, Tom.
Okay, man.
Thanks, Carlos.
It's always a pleasure.
Thanks, Tommy. Take care.
You too, man.
It's always a pleasure to talk to you guys.
You
Bye.
too, man. Have a great one. Have a safe one. Let's go look at this expansion MVO just to see if we're getting an expansion of volume too. So 229 on the NYSE, which is no big deal.
Yeah, it's almost 11 right now.
Nasdaq is.
That's
though.
a big number. Yeah.
See, the Nasdaq, the composite itself, folks, has been pressing. They're moving out of this composite, man. NQ. Let's go back to these NQs for a second. So on those NQs, what I'm going to do, folks, is this.
I was just going to, go for it.
I get some good. No, go ahead. Explain.
Well,
them.
no, please. You.
So what I did here, folks, is
you better
this.
explain it quick. It's diving. It's
I know. So what I did, I'm in the money really good here. So I'm going to buy 4 of them back. But
yeah, you are right here, 43.90, right?
Look at that. So, and explain why I'm going to buy them back at 43.90. So.
Well, yeah. I mean, what's nice is that that's the square middle of the spread.
Right.
So basically, when the market's trading, and there you go, you just got executed. You did. Perfect.
How cool is that?
As we're talking about it.
That's pretty sick.
What's nice is so you just executed 4 of your 8.
Right.
You executed them square at the middle of the market. So you knew that when it was trading at 43.70, when it was trading at 43.90, the bid spread was going to be right around, bid offer was going to be right around 43.90.
Right.
And where you got in that, why not take half your contracts off? You lock in $800 off the table.
Right.
Your whole trade, I think you only had like 500 and something risk.
I had 523 at risk. I already took 800 in.
You already took 800 in.
Right, coming.
Right now, you have another $800 position basically, and you have still $800 of max profit basically to look at.
Right.
I think that's a great way to manage that trade for sure. For sure. You can't go wrong with locking in no matter what happens today, because we've seen the volatility up and down.
Yeah.
So don't think, this can't jump right back up. I know you know that.
There's no doubt, man.
Exactly.
There's no doubt. And the key, one of the keys there, folks, is don't get greedy also.
It's always a mental battle. Because you were joking at the break, always we say 43.70 would be nicer.
But guess what? It's 10:30 in the morning, man.
And that's what I sarcastically said. You're only going to get 43.70 too if you actually wait till the end of the day.
Yeah.
I mean, that's a legitimate deal. Like, you're not going to get 43.70 actually. You might get 0.5 of a point or something.
That's right.
So keep it all in perspective, for sure. Now, I'm just looking. Did you? Yeah, you did get executed. I didn't know why it was showing up red green. It was just because you were green.
Yeah.
So what's your plan for the other 4?
No, the other 4, man, I'm going to ride them all the way.
You're just going to let the market go. Yeah.
Yeah,
No, it's great.
Because
Yeah,
it's like I've already made 300.
Yeah.
And
you've stated your market case. You have your You have your directional bias, right? You had your risk reward in place, and as of now, you're going to see how it plays out. Now, if it gets later in the day, and maybe you can lock in 90 to 95% of that value,
I'll do that.
might
Yeah,
that's I'm just putting right.
And maybe I'll flip the position around if I think it's going to pop.
Maybe anything's possible. Hey, anything's possible, man. Anything.
That's the other side of it too, folks. If you do managed trades like that, you can flip around the second minute. You know what I mean?
It's a strong position to be in.
Going
right?
into
you
the
lock
close.
in profit.
Exactly.
Yeah.
Exactly. Stay right there, folks. Tommy and I are coming. Oh, I guess we're not.
We're not.
Oh, that was
That's
fast. Stay right there. We got our man, Mr. Basil Chapman, coming up next. Swim lesson, Steve Rhodes, Dave White, myself, and Andy Heck. Thanks, pal.
Thanks, man.
Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.